you're gonna see the best settings of EMA and you're gonna learn the most accurate trading strategy, but only if you exactly follow the instructions that I'm gonna explain. So make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, we need to add 7 exponential moving averages to our chart, but don't worry if you are on the free version of TradingView, because I will teach you how you can have 7 moving averages on your chart. Here we click on indicators and we search ribbon. This one, moving average ribbon, and by the help of this indicator we can have 4 moving averages on our chart, but we need to change the settings. So here we go to the settings of the indicator and here we give the special settings that we need in our trading strategy. But you may ask, what is the special settings and what makes it so special? For the settings, we're going to use Fibonacci numbers. As you know, Fibonacci numbers and ratios are like magic and they are found everywhere, from nature and biology to formation of rocks and galaxy, and they have also application in financial markets for unknown reasons. We're going to use Fibonacci numbers for the length of our moving averages. But before that, we need to change the type of our moving averages. As I said, we need exponential moving averages. So here we set EMA for them. Then here for the first EMA we set the length at 5. For the second EMA we set the length at 8. For the third EMA we set the length at 13. And for the last EMA we set the length at 21. The colors are okay and we just go to the style tab and we increase the thickness of the lines so they will be better visible on our price chart. Alright, we're done with the settings of these 4 exponential moving averages, and now we need to add another 3 exponential moving averages. So here we click on indicators and again we search ribbon, this one, moving average ribbon, and for these moving averages also we need to give them special settings. So here we go to the settings of the ribbon and here in the inputs tab, first we remove one of them because here we need 3 exponential moving averages, and here we set the type of moving average EMA for them. And then for the length, again we use a Fibonacci number, but this time 3 of the moving averages will have the same length. So here for the first EMA we set the length at 144, for the second one also 144, and for the third EMA also 144. For the first EMA, the source of calculation should be set at high. For the second EMA, it should be close. And for the third EMA, the source of calculation should be set at low. Then we need to change their colors and we set the color to green for them. And finally we go to the style tab and we increase the thickness of the lines so they will be better visible on our price chart. Alright, we're done with the settings of our moving averages, and now let me teach you how you can find accurate buy-sell signals based on this. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our trading strategy, as you can see we have 2 collections of moving averages that are separate from each other, but we're going to use them together to find trading opportunities. From now, we call this collection of moving averages as green ribbon, and we call this collection of moving averages orange ribbon. This green ribbon is used for trend identification. When the price is above the green ribbon, the market is in an uptrend, and when the price is below the green ribbon, the market is in a downtrend. So in times that the price crosses above or below the green ribbon, it can be a reversal point of the market. But we don't trade just based on crossover signals because it is risky and we can encounter many false signals if we only rely on price crossovers as buy-sell signals. So we're going to use a set of conditions and then mixed with a price action concept to find low-risk trading opportunities in the market. Let me show how you can do it. First, I explain long position setup and then I will explain a short position setup. For a long position setup, we want a situation like this where the price crosses above the green ribbon and we get a candle closed above the green ribbon. So the price should be below the green ribbon and then the price go inside the ribbon and keep advancing and we get a candle that is closed above the green ribbon. Here you can see that this candle is closed above the green ribbon. This is an initial signal that probably the price is turning to an uptrend, but we need more confirmation before entering any trade. In the next step, from here, when we got a candle closed above the green ribbon, we wait for the orange ribbon to completely go inside the green ribbon or above that. At this point, when this candle is closed, you can see that the orange ribbon is completely inside the green ribbon. You can see that this red line, which is the longest EMA, it went inside the green ribbon. So here at this point, when this candle is closed, we have the orange ribbon completely inside the green ribbon or above that. In the next step, we focus on the price and we want a pullback of the price to the green ribbon. It can be just touching of the green ribbon or it can go inside the ribbon, which is our case here, and it is the ideal situation. If the price goes below the green ribbon but still very close or in touch with the green ribbon, it is accepted and we can wait for our final confirmation. But if it just goes down and the distance becomes bigger, it can be a signal that the upside momentum is not strong enough to turn the price to an uptrend. Alright, here you can see that we got a pullback to the green ribbon. When the price goes for a pullback, this swing high that is created here, it can play as a potential resistance level for the price when the price is turning up. So we mark this level and we wait to see if the price can close above this level or not. At this point, this candle, you can see that it is closed above this resistance level. Since the candle is weak, we evaluate the moving averages to see how the momentum is. You can see that when this candle is closed, the orange ribbon is completely closed above the green ribbon. There is no overlap between them, and this is a signal that we have a strong upside momentum. And also you can see that all moving averages are in order from short to long, and this further confirms that we have a strong upside momentum. So although the breaking candle is weak, but the moving averages are suggesting that the situation is okay. So the buy signal here is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss for this trade is placed below the orange ribbon or even below the green ribbon, which is a safer place in case if it is not very far from your trade entry. In our case here, if we set below the green ribbon, it is far from our trade entry, so we set it here below the orange ribbon. And for the profit target, we set it at risk to reward ratio of 2. This was a long position setup, and now let me teach you a short position setup. For a short position setup, we want crossing of the price below the ribbon, the green ribbon, and having a candle closed below the green ribbon. So for this setup, the price should be above the green ribbon, and then we have the price going down inside the ribbon, the green ribbon, and then we get a candle that is closed below the green ribbon. You can see that it happened here. We got a red candle that is closed below the green ribbon. In the next step, we want the orange ribbon to completely go inside the green ribbon or below that. At this point, when this candle is closed, you can see that the orange ribbon is completely inside the green ribbon. The red line here, which is the longest EMA, you can see that it is inside the green ribbon. From now, we wait for a pullback of the price to the green ribbon. As I said, it can be just touching of the green ribbon or ideally going inside the ribbon, which is the case here. If the price goes above the green ribbon, we want it to be very close or in touch with the green ribbon. If it goes far, it can be a signal that the downside momentum is not strong enough to turn the price to a downtrend. In the next step, we use price action confirmation. when the price goes for a pullback, here a sewing low is created, which can act as a potential support level. We mark this low and we wait for the price to close below this level. Here you can see that we got a red candle that is closed below this potential support level. The breaking candle is strong and showing downside pressure. In case if the breaking candle is not strong, we can evaluate the moving averages like our previous example. In this case, you can see that we have a long red candle and the lower shadow is also very small, and this shows a strong downside momentum. So the sell signal here is confirmed, and in practice we could enter a short position here at this point when the new candle was opened. The stop loss above the orange ribbon or above the green ribbon if it is not far from our trade entry, and profit target at risk to reward ratio of 2. Please pay attention that we can have a situation like this where the market goes to a trading range. For example, here the price was below the green ribbon and then the price crossed above the green ribbon and we got a candle closed above the green ribbon, as you can see. But after that, the price went to a trading range. The rules of our trading strategy will help us a lot to not enter a trade in this situation. For example, in this case, after the price closed above the green ribbon, you can see that we didn't get the orange ribbon completely inside the green ribbon up to this point where the orange ribbon is completely inside the green ribbon. Then we got a pullback to the green ribbon, but in the advancing of the price after the pullback, the price couldn't close above this swing high and again went down. Here now it's clear that the market is in a trading range, but in other cases, we may get a false signal, for example here. As I said, the conditions that we have in this trading strategy and with different layers of confirmation that we should follow in this trading strategy, it helps us to avoid majority of the false signals in situation like this where the market goes to a trading range. But still, you can have false signals. There is no trading strategy or method that can give you guaranteed signals. No, this is not possible, and losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.